All right, taking a look at our S&P 500 index today. You can see that we gapped down. We opened at 64.01 and we closed on Friday right around 6,460. So we're just looking at roughly a $60 gap down. And this is the largest gap down that we've had in the past 3 months. This is roughly a $40 gap down. And the reason that we're probably having this gap down is because news came out late last Friday from the courts that the tariffs, Donald Trump's tariffs, are illegal. That will most certainly be appealed, and that most certainly will go to the Supreme Court, and that will be settled there. Another reason that we might have this gap down today is it's the first trading day in September, and historically September is the worst month for stocks in the S&P 500 or the stock market in general. And by being the worst month, that means that stocks typically go down in September. Stock market has been largely cyclical, although some of the cyclicalities of the stock market are changing because we have so many retail investors that are in the market now. And retail investors or day traders are upsetting the cyclical cart, so to speak. There are more retail investors today than there ever has been, so they may not allow September to be a bad month. This 3-month run was expected not to happen by all of the experts, by the overwhelming majority of the experts, hedge funds, mutual funds, large bank managers. They kept calling for a recession. They said that this is eventually going to turn around, and this is a 3-month period on this run. And the people who made this run happen, it was the retail investors. Retail investors before COVID did not have this much power. So when the markets were cyclical, and traders and managers, hedge fund managers, or mutual fund managers, they're used to a cyclical pattern. That's how they created the market movement. They no longer can really rely on that. So it'll be interesting to see what happens this September if this gap down is just the beginning of a longer downward trend. But for now, we'll go ahead and start taking a look at the stocks that hit our triggers and sent us some sell alerts. The first one we're going to look at is 3M. All right, we had price cross on Friday, the fast moving average, and then opening up today, we had price fall below the slow moving average. Now, this is a continuation of this cross. So we are going to either sell or set a sell order. Let's take a look at the price that I purchased these the last 3M for. Now, I currently have 9 shares. However, I should have 8. So somewhere I bought and accidentally bought 1 additional share. That's no big deal. All right, so all of the stocks that I purchased for 3M, I purchased at a higher price. So we're going to set a sell order. Come in here, 3M to our watch list. Right click, sell order. We're going to be selling 2. And the sell order we purchased at 154.32 is our lowest purchase price. That's the closest thing to our the current price. So since our purchase price was 154.32, we are going to take 10% of the hundreds place, which is 10 cents. We're going to add that 10 cents to our purchase price, making it 154.42. So this is our current sell order. Good till cancel, extended hours, confirm and send, and there's our sell order for this cross. Tomorrow, if we have a continuation down for the price crossing the slow moving average here, we will set another sell order. For now, we're going to move on to Marriott. And let's go back to 3M quickly. You can see that price actually fell down to 151.61, but it's been moving up all day. So it is possible that while making this video, this may actually sell. So we'll move on to Marriott, and if it sells, we'll probably see the sell order up here in the left-hand corner. All right, so Marriott, we had price fell on Friday below the fast-moving average. We have another opening where it opened below the slow moving average, just like it did for 3M. So this is a continuation of this cross. So we're going to take a look at our Marriott. We currently have 2 shares, and both of those are purchased at over $300. So we're going to set a sell order for this one. We're going to set one sell order for this cross here. And our lowest purchase price was $302.73. So from the $300 position from the hundreds place, 10% of that is 30. We'll add 30 cents to 302.73, and that'll be $303.03 as our sell price. $303.03. Good till cancel, extended hours, 1 share, confirm and send. And there's our sell order way up there for Marriott. All right, Netflix. We had just purchased 2 of these just either a week or a week and a half ago. Not long ago, not long at all. All right, so our current price is below our purchase price. All right, we currently have price moving above the slow moving average. Now the price moved both on Friday. It moved below the fast moving average, and it crossed the slow moving average. We have price moving above the slow moving average, but we still have continuation. This is a continuation of the price crossing our fast moving average. Price here is lower than our fast moving average. And we already have 2 shares, but we already have a sell order for one of them. So we're not going to do anything else with Netflix at this time. So we'll move to QQQ, the triple Qs. Triple Qs is the index, or is it's an ETF of the top 100 stocks in the NASDAQ. Right, so we had price cross both the fast moving average and the slow moving average, and on that cross on Friday we had the fast moving average cross below the slow moving average, and from all of these crosses we have continuation. Even though price is moving up, it is substantially lower than the close of our candle on Friday. And if you're new to my videos, when we have a confirmed cross of the fast moving average crossing our slow moving average, that is when I like to sell all of the shares that I would have or be able to sell at a profit. So right now we have 4 shares, and out of those 4 shares, all of them were purchased. No, we have 1 share that was purchased at $535. So we will sell 1 share right now at price. Move past that pretty quickly. Let's come back down here, selling 1. Hopefully that goes. It is not going, so we'll just sell market. Sold that at $563.07. So that is roughly $28 in profit for the sale of that 1 QQQ. Now I've already placed sell orders for 2 stocks. It's a pretty simple process. For the remainder of the video, I will not be doing on video the setting up the sell orders. I'm going to set sell orders for the other 2 shares of QQQ, but I won't do that on video. All right, there's the 2 orders that were basically purchased. We'll just round it to $574 each. So the next one is Shopify, SHOP. All right, same thing here. We have a continuation of price moving down. It's much lower, even though it's a green candle going up, than the close on Friday. And we have the fast moving average crossing the slow moving average. Right now, I currently have 2 shares. So that is all we have of Shopify. And we bought those at $122.23. So bump this up to 2. We'll see if this goes at $138.65. So at $138.65 from the $122, that's roughly $16 in profit per share. So we'll say $32 in profit there for selling Shopify. And next on the list is ETF for semiconductors, and that is SMH. All right, we had price move across both moving averages, and we had the fast moving average cross late on Friday, past the slow moving average. We have continuation of price moving down again. Even though the candle is green and going up, it's still significantly lower than the close on Friday. Unfortunately, all of the SMH that we have, I have 8 shares. So that's 4 books totaling 2 shares each. I max out with 4 books. And my purchase price of all of those are higher. We roughly will round it up to $295 for purchasing those shares. Again, I am going to set the sell orders for SMH off video. All right, now we have a sell order for all 8 shares of SMH. I'll go to Uber and a price alert for Uber. All right, for Uber, we have 8 shares. That's 4 books with 2 shares each. We had price move down on Friday below the fast moving average. And then again, just like all the other stocks apparently, we had price drop much lower and open below the slow moving average here. So we're going to sell for this particular alert. Tomorrow, for this alert that was triggered for price crossing the slow moving average, we'll find out tomorrow if we have price continuation down. And if so, then we'll either sell or set a sell order for Uber then. But right now we have Uber that all 8 of these were purchased at $91.53. So we'll be able to sell 2 shares at a small profit. So $92.89. And buying those at $91.53, so we're looking at roughly $1.30 per share, so $2.60 of profit for the sale of Uber. All right, we had 2 more stocks that hit their sell triggers, and the next one is an ETF for XLY, which is consumer discretionary. We had price fall down significantly lower than it closed on Friday, but we have for the first one, I believe, price that did not fall below our slow moving average. So we are looking at a continuation of the price cross of the fast moving average on Friday. We had price cross and close below our fast moving average on Friday with a continuation down today. Now our XLY, we currently have 4 shares. I maxed out with 1 share for each book. And I currently have 2 shares that I bought at $229.49. So we'll drop this down to 1 share and we'll be able to sell at a small profit. Drop it down a few more, drop it down to $229.57. And it's not going, so we'll hit sell market. And that sold at $229.61. So that's 4 cents higher than what I had asked to sell for. So that is a 20-cent profit on that particular share. And the last stock that hit a sell trigger and set us an alert is Yum. We had, what do we have? So we had price move down, then it was choppy. We had price move back up. So this was not a continuation of, so this would be Wednesday's cross below the slow moving average. And then we had it come even further up. So then we have price now today dropped and it is lower than Wednesday's close on this candle. So this is a continuation of this close on Wednesday. Now I currently have 4 shares and that is 4 books with 1 share each. And I currently have 2 sell orders. The only time that I will have more sell orders than the shares that I have is when we have fast moving average crossing below. Until then, I will only have half of my shares. So I won't have more shares, or excuse me, that's the second time I said it. I will not have more than half of my shares that I currently own placed in sell orders until we have price of the fast moving average move below the slow moving average. Until that happens, the maximum amount that I will have in a sell order is half of the shares that I currently own. And that's what we have right now. So since I said that twice and I messed it up twice, I'll restate that all again. So right now we have price that is currently below the slow moving average, and I currently have 2 shares that are sitting in sell order. The only time I will have more than half of the shares that I have is when their fast moving average is below the slow moving average. Until then, the maximum I want sitting in a sell order is half of my shares. So 1/4 of my shares would be listed as price moves below the fast moving average. Another 1/4 of my shares, since I have 4, we're already at 2, so another 1/4 of the shares that I own, in this case it's 1 each, so that would be the total of half my shares is 2, is when price falls below the slow moving average. And as for every stock, every equity that I own, this is my strategy and this is my policy on setting sell orders or selling out of shares. As first when price drops below the fast moving average, and the second when price falls below the slow moving average, and then the remaining half will be set in sell orders or sold when the fast moving average crosses below, as in this case, when the fast moving average crosses below the slow moving average. And if you're new to my videos, this is the first time you're seeing it, I know that was a little bit confusing. But I do promise you, if you continue to watch my videos, all of it will make sense over time as you continue to watch and learn my strategy and learn my policy and possibly even start trading some of the trades that I'm doing as well. Right, so we made it through our sell list. Next, we're going to take a look at all of the stocks that were triggered for a possible purchase. The first one on the list is McKesson. MCK is the stock ticker. And we have, not only do we have price move above our fast moving average on Friday with a continuation today, we recently had the fast moving average cross the slow moving average. However, we are still in somewhat of a downturn. We also have price on our MACD. We have both lines are below the midline of our histogram. Both the faster moving line, which is our MACD line, crossing the slower moving line, which is our signal line. So each time the MACD line crosses the signal line is an indication to either possibly might be a good signal to buy, or in this particular case back here, when it crosses down, a possible opportunity to sell whichever stock. The MACD measures velocity of price, where this chart up here actually measures and tracks current price. So even though we have price moving above the fast moving average, with this being what appears to be a longer downward trend, and since this is trending down, since our slow moving average is trending down, and we have both of our indicator lines on our MACD below the midline of the histogram, I will not be purchasing any shares of McKesson. We're going to let that go, and we'll see what happens with price tomorrow. If price moves up tomorrow and continues up, and this continues up, and we start to see a turn on our slow moving average, then maybe I'll consider buying it tomorrow. But for now, we're not going to be purchasing any McKesson. We're going to move on to our next stock that was triggered, which is Riot. Here we have another stock that last month, possibly, the fast moving average was below the slow moving average. So we're going to go back to our monthly chart. So we had a cross 2 months ago. We had continuation. So August is the continuation from July's cross of the fast moving average above the slow moving average. And we have still a continuation here. So we're going to remove this drawing, go back to our daily chart. Excuse me, wrong chart. Let's get up here and get the right chart this time. 3 month and 1 day. Get to our daily chart. Now, we have price crossed above our fast moving average, and that happened today. Now, even though this happened today, when it crossed, we were in the month of August. So I didn't have a true continuation of price action from July's cross on the monthly chart. So I did not purchase, I did not max out on all of my shares. And with Riot, with my 4 books, I would have 64 total shares. So right now I only have 1 book with 16 shares. And typically I try to max out all 4 books with however shares I would buy for that specific equity. Again, for this stock, for Riot, it would be 16 shares per book. I did not buy. So now I'm faced with the question, do I buy now, even though price crossed today, the fast moving average, or do I count this as a continuation of this cross? So Riot is a Bitcoin miner. And for the last several weeks, Bitcoin has not been doing well. So we're going to take a look at Bitcoin, which we just come into the ETF IBIT, which very closely tracks. So right now we have Bitcoin lower. We have the fast moving average of Bitcoin on our daily chart lower than our slow moving average. So since we have price that is lower on our daily chart for Bitcoin, I am not going to be purchasing any Riot. I'll admit I do not have enough experience in trading the Bitcoin miners, comparing it and see if there's a correlation to the movement of Bitcoin. Among the hundreds of things that I need to research, that's one of them. I need to see, do these run in parallel? At this particular moment, for these past few, at least for the past week, Riot has been running, it's diverged from the movement of Bitcoin. So here we have a slow downward trend where Riot, go back to the Riot, RIOT, we have an upward trend happening right now. Now, I don't know what this buy order here is, but we're going to go ahead and cancel that buy order. There's a buy order for only 1 share. I don't know when I placed that. Doesn't matter. That was an accident, apparently. Now, the 16 shares that I currently have, I bought at $14.88. So if price moves above that $14.88, I will consider purchasing 16 more shares of Riot or maxing out. That'll be dependent on what IBIT does, the price of Bitcoin does. If price moves above my $14.88 purchase price of the 16 shares of Riot, and this has turned around and started going up, then I probably will max out on my Riot shares. But until then, I'm just going to hold what I have, and we're going to move on to Ross Stores, which is ROST. And here we had a cross way back here, and I didn't buy for the reason that when this crossed, the monthly chart of the fast moving average on the monthly chart was below our slow moving average. Quickly, we'll go back to that, and we're still there. We still have our slow moving average below our fast moving average. So drawings sometimes just automatically race after 3 months. So since we're looking at 1, 2, 3, 4, back here is when I set it. So I need to add another drawing to put that indicator up that 1 month, we're below our 1 month candle of our slow moving average. So we'll go back to our daily chart, 3 month and 1 day. And we'll add a drawing to this one as well. 1 month. There we go. So now I currently have no shares, but I will buy 1 book. Now for Raw Stores, I buy 4 shares total, so that's 1 share for each book. So we're going to buy 1 share of Raw Stores, and the reason we're buying 1 share, even though we're on our 1 month chart, our fast moving average is below our slow moving average. Raw Stores has been an upward trend. Let's take a look at their earnings. They are roughly 13 cents lower on their actual earnings per share than what was estimated. However, what's happening is we're heading into the month of September. And as I stated earlier in the video, September is the worst month. That is when stocks typically go down. And when I say stocks typically go down, we're looking at the overall market, and most of the market is weighted by tech stocks. So it's mainly tech stocks that, if the cyclical pattern of stock downward trend of the market occurs in September, Raw Stores is a discount department store. they're a staple. They're a defensive stock. So as the market turns, with the majority of the tech stocks that are overweight in the market are going down, Ross Stores, another store, TJ Maxx, they typically go up. So we're only going to buy one book, which is one share at $150.95. And we got it at $150.91 is what our purchase price for that Ross was. The other reason I considered buying it, we have both the RSI is in an upward trend, and both lines, our signal line and our MACD line, is above the midline of the histogram. So those were the reasons that I chose to buy one share or one book of Ross, even though on our 1 month chart, the fast moving average is below the slow moving average. So that, oh wait, we have another list and we have no other stocks to look at. Wait, we do. We have Disney from several days ago. From last week, at some point, sent a sell alert. So let's see if that's still positive. So here we had Disney, but we have a downward movement today in Disney. So we will not be doing anything with Disney. And then we had ANET. Did I say a sell alert for Disney? No, that would have been a buy alert. We're on the buy list. So I misspoke there. Sorry about that. So ANET, even though we have an alert to buy, the fast moving average is lower than the slow moving average. So we will not be buying ANET, which is Arista Networks. Next, we have on the list from, I believe, Wednesday of last week, we have Rocket Lab, RKLB. And here we have Rocket Lab's been in a nice, they've almost doubled. At one point, they were twice the amount of it was at the cross on June 17th. So in a little over a month, they had doubled in price. And I'm on the wrong stock. Sorry, it's supposed to be Roblox. RBLX, not Rocket Lab. All right, so here we have a signal that crossed. We're going to look at Friday, Thursday. We had a trigger to possibly buy, but we did not have continuation. We have price crossing back above our fast moving average and a slow moving average. Even though price is above both those averages, I will not be purchasing, because my signal to purchase stocks is when the fast moving average crosses back above our slow moving average. So we have an alert that was triggered just by the price action moving above both of these average, but I do not buy if the fast moving average is below the slow moving average. So let's see if there's another stock on the list. Okay, from Tuesday of last week, we have Keysight Technologies. Now, several possible reasons of why I wouldn't buy when we have an alert from a price trigger being sent our way is because I didn't have enough money to buy it on the day we got the alert, or we didn't have continuation in price from the previous day's alert. Or as you've seen in the previous video, we had price of the fast moving average is below the slow moving average. And another one is that price of the fast moving average on the monthly chart is below the slow moving average. So here we still have, even though we had triggers back here, all the way back here is when we actually got the original trigger, price continuation has just been down. It's not been a continuation up. So I misspoke there. We don't have price continuation down. We don't have a confirmed price continuation. So now that we have prices confirmed going in the wrong direction, we're going to cross this off of our stocks to look at. And the next one we're going to look at is PayPal. That's from the same day. We had a trigger. We received an alert to possibly buy it, but we did not buy it. So here we have price. We moved off. Like I said, this was last week. We had fast moving average cross the slow moving average. The day before, we had price move above both moving averages. And we did ultimately get continuation, but I didn't have a lot of money last week, so I didn't buy any PayPal. And the opportunity to possibly buy today did not occur because price reversed. PayPal is now going down. So I will be crossing PayPal. No longer need to look at that one every day. So then another stock that we have to look at is L3 Harris, which is LHX. L3 Harris Technologies. Whenever it triggered, it doesn't matter. We have price moving back down today. And we can see immediately that we have a reverse in our buy opportunity, which occurred last week. So we'll knock that off the list as well. Don't need to look at LHX. Another stock. So we have two other stocks from last week that we have to take a look at that I've been looking at every day is Booking Holdings. Again, here we go. We had price and we do not have continuation. Cross that off the list. And Kinsale, KNSL. We had price move above our slow moving average. This was over a week ago. However, we do not have price continuation up. There's very little to no upward movement on Kinsale. So we won't be looking at that again. All right, so we are done with our sell list and we're done with our buy list for today. All right, well, I went back and I looked at my list to clarify on CVS on why that was on my list. And that is because, and I pulled up the monthly chart, that is because we have a continuation of price moving above our slow moving average. We had a cross 2 months ago in July. And now that August is over, we have a continuation in price above the close of July's candle. And we're starting out above our August candle's close. So that is a good sign. So we go back to our daily chart and we take a look at CVS. And I currently have 2 shares. And when I'm maxed out with all 4 books, I have 8 shares. So we're going to purchase 6 more shares. 5 plus 1 more, bump that up to 6, and we're going to purchase these at $73.77 hopefully. And we did. We got them at $73.77. So now we are maxed out on our CVS shares. And that is because we have a beautiful continuation. CVS also is a defensive stock. It is a consumer staple. So if this September the tech stocks continue to bring down the market just as it is today, CVS is a stock that likely will go up if the cyclical pattern continues. So for now, we're going to get rid of this drawing. We're going to go back to our monthly drawing. And that was automatically removed. So we'll go back to our daily chart. And we had another General Dynamics was another stock that crossed its monthly chart. We have a confirmation in price above the slow moving average on the monthly chart. However, we have price continuing down the past 2 days. And the last stock that we have that we had a confirmation of price above our monthly chart is CoStar Group, CSGP. Now, even though we had price continuation that was confirmed up, oh no, it just is on our list to check for confirmation, and we do not have confirmation of CSGP. So now we'll just go back to our SPX chart, our S&P 500, come back, we'll reset to our daily chart. So at least I did figure out why CVS was on the list, and hopefully I won't make that mistake in the future. So now I can say with certainty we are through our sell and our buy lists. All right, well, we moved higher. We moved to 6,415.54, and that's our closing price for the day. So that's a nice little surprise. Wasn't expecting that. But let's go ahead and take a look at our results for our trading activities for today. All right, and here we go. For today, we have $157.49 in realized gains. In this account, we are looking at a 1.42% so far gain in our portfolio compared to the S&P 500 at 0.8, which is roughly 0.6%. So we've improved over the S&P 500 from last week, and our current portfolio balance, counting this new account to the old account where all the funds were transferred to this account, looking at it combined 1626 and a 142, roughly 17.7, and 1054 to 0.8, we're looking at 11 point, we'll just say 3. So 17.7 to 11.3, we are performing 6.4% better than the S&P 500 to date. So we are finished for today. First trading day of September taken care of. And for those of you who made it to the end of the video, I'd like to thank you very much because you hung in there while I stumbled and bumbled around there for a little bit. So with that, I hope you all have a wonderful rest of your Tuesday evening.